The JSE All Share index is up nearly 1%, the highest since October 7th, mainly supported by resource-linked shares and financials. Investors are still assessing the global recession risks ahead of the release of more corporate earnings this week. Petri Redelinghuys is a trader and founder of Herenya Capital Advisors, with us now to just go through some of the latest information. Petri, the rand seemingly a little more upbeat today. How come?
Hi, sorry, I'm a bit shocked still from the previous story. So the rand a bit stronger, yes. As you mentioned, it's about 1% stronger at this stage. I think mostly because, well, what we saw was a very negative day on Friday in the US and I suppose on a global level, where the very strong move we saw that took place on Thursday after the CPI data from the US was reversed and the market gave back a lot of the gains that it had made on that Thursday. Over the weekend, however, some developments, well, I guess some speculation that Liz Truss will resign from government, I guess, in the United Kingdom in this coming week is bringing a little bit of positivity into markets. There's a big feeling that some of the policies that her party and she had put in place is part of the reason why we are seeing, quote unquote, a collapse in the bond market in the United Kingdom. So that's starting to reverse a little bit and potentially sort of a 180-degree turn on the policy implementations that they've made is bringing a little bit of hope into the markets. Also, I think that, we've had a very long time, well, relatively long time of the markets just getting really beaten very hard. And we're seeing a bit of a reprieve come in now. Whether or not this is going to be a longer-term reprieve, the markets are bouncing. I mean, by no means do I think that this is the bottom. I think, investors need to be mindful that we are currently trading through a bear market scenario. So the market is just generally more volatile. Liquidity is lower, which means that there's a lower amount of transactions taking place every day, which means that share prices move a bit more erratically because there's just less buyers and sellers, and the price differential between what people are willing to buy and sell it might be slightly larger, and therefore we see these very violent up and down moves in both directions. But the rand a little bit stronger today, as is global markets as well, bouncing a little bit. I think predominantly on the hope that, well, Liz Truss might not be in office by the end of the week, and also the US corporate earnings season starts this week. Well, it started last week, but really the meat and bones of it starts happening this week, where we see U.S. corporate companies, the big listed businesses, start delivering earnings results, right, and how they've done over the last quarter or so. And, we'll have to, I think there's a little bit of anticipation and hope baked into that pie, in the sense that maybe U.S. companies are not finding it as hard as what the street, anticipates for them to have. Again, we don't really know what the future holds. Right. We just have to kind of wait for the results to come up.
What about gold, Petri? Because it's also risen slightly, hasn't it, from Friday's low, which was amid that pause in the dollar rally?
Yeah, so like I said, I mean, a rising tide lifts all ships. So generally one would think that the relationship between gold and risk is somewhat inverse, right? So when the markets come under pressure, gold tends to shine, and vice versa. However, during times of extreme turmoil, which we saw, I guess, at the beginning of 2020, and now again that we've been seeing, I guess, for a prolonged period now already this year, is when things are really down, people sell every asset, whether it's gold or equities or, energy, doesn't really matter. They sell everything in order to raise liquidity. If you're fearful of losing money, you're going to cash in the things that you at least still have some value in. And that, I think, is part of the reason why gold price has come under a bit of pressure. And now with a bit of a weakening of the dollar, which shows a bit more confidence in the rest of the world. The market's bouncing a little bit. We're seeing that sort of bullish bid come back into gold. Whether or not, again, this is the bottom, I don't know. I think that gold does have a space to do really well in the next 12 to 24 months. That is, of course, dependent on the global macroeconomy. It takes a little bit of time, I think, for gold to really start rallying once the market starts to accept that, well, it's going to be a tough time going forward for equities. You've
made a lot of reference today to the situation in the UK, and let's talk about it a bit more, because the UK government bonds surged while the pound rallied, in fact, because investors were weighing whether the government would indeed further depart from the expansive fiscal strategy that led to basically an enormous markets crash, right? What's happening there now? Because there is a new finance minister in place, but it's not clear just how far the policies will shift.
Well, that's exactly it, right? So the I guess we could debate whether or not this is the truth or not, but the general consensus or general feeling is that there was a very drastic shift in policy. When Boris Johnson left and a new prime minister came in, and a new finance minister, and everybody came in, and then they said a whole bunch of really silly things in a very short period of time, right? I mean, one of the most recent ones that was said was that, the finance minister kind of warned pension funds that they have 3 days left to get rid of the risk on their books. And the risk in this case were government bonds, right? You can imagine what that did to the bond market. It was chaotic, right? So the question is now really, how much of a 180 is the government going to do? Is the finance ministry going to do there? Are they going to retrace all their steps and convince the market that they're actually putting policies in place to foster a strong financial services environment, or financial economic environment for companies to do well, or are they going to continue to misstep and make these really bold claims that are potentially going to do further damage to I suppose the public's trust in the finance ministry in the UK? Because right now it looks like it's a lack of trust. So, as said, it is expected for Liz Truss, well, at least the market is kind of, egging it on, I suppose, for Liz Truss to resign, as well as a whole new sort of prime minister, new finance minister ought to take over. And by the end of the week, we have a better standing in the UK. And that, I think, is part of the reason why we're seeing this recovery happening today.
So very quickly then, Petri, in 30 seconds, if you can, let's talk about Prosus, which has sold its Russian classifieds unit. That then brings Naspers subsidiary, or the Naspers subsidiary, I should say, a step closer to fully leaving that market.
Yeah, so they, upon the invasion of Ukraine, I guess, many companies decided that they wanted to get out. Prosus has now managed to sell that business for $2.4 billion, the Russian classifieds business. They're selling it to a Russian investment group. It's a Russian businessman his name's Ivan Pavrin or something like that. I'm not 100% sure how to say it. But they sold that business now for $2.4 billion. We don't yet know that the share price is reacting okay. It's up around 0.6, so no real major reaction to it. We don't really have any clarity around exactly how the handover is going to work and all that kind of stuff. But we do know that the deal is made and the business is sold. So I guess that does simplify Naspers' business a little bit, but also it's just the completion of what they said they would do, which is completely exit the Russian market, I guess, in protest to the invasion of Ukraine.
Thank you very much for that, Petri Redelinghuys. Always good to speak to you, Petri. Thank you.